think a lot of people, most entrepreneurs are thinking, hey, someday I might want to sell this business. And so having really good books where people can go back 2 or 3 years or more and have, your financials in line with industry standards is really important to getting that top line that you're looking for your business.
Welcome to Short-Term Rental Solutions, a show for hosts and property managers looking to overcome obstacles, maximize revenue, and optimize their short-term rental business by learning from the innovators who are designing the solutions that are shaping our industry. Hello, everybody. Welcome back to our show. We are so glad to have you here, and thank you for taking a minute out of your day to join us. We're super excited because, as we're approaching year end, one of the things that's important for us to be talking about is our financials and accounting. It's great to be considering that all year long, but particularly we have an expert here today with us, and that's Jesse from Ximplifi. And if you're not familiar with Ximplifi, it is an accounting solution that's specifically designed for our industry, the short-term rental industry. And Jesse is also a CPA, so he's really going to be bringing some high-level expertise and knowledge for us today. And I can't wait to have this conversation because it's almost self-serving in the sense that I feel like I have tons of questions. So I've got all kinds of things to ask him today, and I'm sure that you're going to learn a lot as we go along too. So Jesse, thanks so much for joining us.
Yeah, thanks for having me. I'm excited to be here.
Yeah. So would you just take a moment to introduce yourselves to the listeners of the show today?
Yeah, sure. So, name is Jesse. I been a CPA for, too many years now, but I spent about 10 years in public accounting. Started off with PricewaterhouseCoopers, which is where I spent a better part of about a decade. I then became the CFO of a small but ultra luxury real estate investment company. But then they rented those luxury properties on a short-term rental basis, as well as managed a nice portfolio of ultra luxury homes, actually all over the world. So I was privileged to get that position, largely tasked with transforming their finance function. Did that by leveraging technology and really building up a great accounting team there. And did that for a couple years and said, I always had a bit of a dream or a bit of a urge in the back of my mind that wanted to start its own company and own firm. And so that's how we founded Ximplifi, and we really hung our hat almost exclusively in the vacation rental business, just because I felt it's an industry that needed some leadership, both from a technology and accounting perspective. And so, that's what we did, and started just over 5 years ago now. And it's been a great ride. It's really turned out to be, a great decision to focus in this industry.
Yeah, well, the need is definitely there because, we're running, in some cases, multi-million-dollar businesses. And so making sure that our accounting house is in order, as it were, is crucial.
Yeah.
So if you don't mind, let's just jump right in because I feel like our time together is going to go really fast, and I want to get as much knowledge and education out of you as possible.
Sure.
So I have actually had conversations with various other hosts and property managers discussing the concept of when we are doing our accounting, do we, cash basis, accrual basis, is one preferred over the other? Does it matter, what we choose to do, whether we're, just an individual property owner versus a property manager? Yeah, sort that out for us for a second.
Yeah, well, it's a complicated subject, and then you throw in trust accounting and all that, it gets even more complicated, certainly. First, I think it's important to just define, hey, what's cash accounting versus what's accrual accounting? Because I think some people might not even quite understand that. But, if I think about cash accounting is, hey, I receive cash, I recognize income. And that means if I receive money today for a reservation that's going to, not arrive for 2 or 3 months, hey, that means I'm going to record the revenue today when I receive the cash, and then later on down the road, maybe when I pay out the owner, I might record that as a cost of goods sold. That's now that is by far not my preferred approach to accounting for short-term rental accounting, but certainly that's an approach that some people take. So if we go to the flip side of accrual accounting says, hey, I receive a booking today, I receive cash today, but actually that's going to sit as an advance deposit until that person arrives. And then when that person arrives, I'm either going to recognize that revenue, maybe over the life of the stay, uh, or maybe I recognize all of it on check-in or all of it on departure. So that would be the difference between accrual versus cash. Certainly, as an accountant, we prefer the accrual method of accounting because it's the best way to one we call revenue and expense matching, which means, hey, if I want to understand how I'm performing in this particular month, well, I really need to understand. I need to match up my expenses with when I'm actually earning that revenue. So the idea is, hey, I'm earning that revenue when that guest arrives. The other piece of the puzzle is, hey, do I show revenue as my revenue? We're talking about like accommodation fare, right? Accommodation fare that I'm going to pay out to an owner. Do I show that as my revenue, or do I put that on a balance sheet, basically as a liability, and then only recognize my management commissions? So, again, a bit of a trickier subject, but certainly the best practice in the industry is that, hey, you're going to actually record the owner's revenue as a liability, basically payable to them, and the revenue that's going to be shown on your balance sheet on your income statement is going to be the management commissions, maybe cleaning fees, other ancillary fees that you're going to be earning as the management company, and not actually showing the accommodation fare on your P&L as a management company. Anyway, diving into the weeds already, but those are subjects that we help people think through, and again, use best practices so that they can benchmark themselves against other companies. And then also, hey, we think a lot of people, most entrepreneurs are thinking, hey, someday I might want to sell this business. And so having really good books where people can go back 2 or 3 years or more and have your financials in line with industry standards is really important to getting that top line that you're looking for your business.
Yeah, absolutely. Well, and I'm just going to mention here, Jesse and Ximplifi, they have a great software product called VRPlatform. And I just want to put out there that at the end of the show, we have some bonus content. And Jesse is actually going to take us in there and show us around that platform. So if you're listening to the podcast today, make sure you stick with us through the show, but then also follow us over onto YouTube so that you can really see what they've built and how they can help us really simplify keeping all of our financials really straight and neat, like you said, so that we have everything ready to go no matter what the long-term, goals are for our business.
Yeah, definitely.
So, Jesse, I heard you talking a little bit about, the revenue that comes in on reservations, and, particularly if you're a property manager, there really is a distinction between rents and revenues, but
Mhm.
that's easy to get confused. So, how would you explain that to someone who may or may not realize that there actually is a distinction? Because people just think, oh, we got this money for this reservation. That's our revenue. Like, that's kind of the obvious thing that people think.
Yeah, well, yeah, I think again, talked about it a bit, it's as a management company, and this goes beyond, uh, say, just short-term rental accounting. If we can look at a much older industry, which is just traditional property management that manages traditional properties, and how do they recognize their revenue? And so, if you're a property manager and you're receiving a monthly lease on behalf of a landlord that owns a piece of property, but you're maintaining it, collecting the money for them from the lessor, or I'm sorry, lessee. Uh, how would you treat that? Those rents that you're collecting. Well, really, it's that you're bringing money in, and as soon as that money hits your bank account, it's really payable to another owner, and so it's not your revenue. The revenue that you're earning is your management commission, perhaps cleaning fees and the other ancillary fees that I talked about earlier, damage waiver. Maybe you charge a booking fee. Maybe there's different fees that you charge the owner, and that's really your revenue that you've earned as the management company. And those rents, a lot of people will use the term rents in trust. So when I receive rents, that's rents in trust. And so, and rents and trust basically means, hey, you have rents that are in trust of other people. And so that's how, we typically help our clients, the companies we work with, think about it, which, again, will throw people off because maybe they haven't been following that methodology, since they started their business.
Yeah. So another question that, sorry, I can just keep pepper you the whole time with question after question after question because there's just a million different things. But okay, I had a reservation. I got a deposit. Maybe 50% of the total cost of the reservation has come in, and I guess if I understood you correctly, if we're using the accrual method, that money is, oh man, I can't remember the exact way you said it, but it's kind of sitting there, hasn't really been
Deferred,
say it. Go ahead.
deferred revenue, essentially, or advanced deposit.
Okay, advanced deposit or deferred revenue. So that money is sitting there, but then a couple of months go by and they end up canceling before their stay. So how does that wash out in the accounting?
Well, it all depends. You basically beg the question of, is that, did they fall within their window of cancellation or not? So are you going to keep some of that money or not? In accounting, and actually, especially even when we talk about trust accounting specific for short-term rental, we talk about a lot. We talk about events and triggers. And so when I receive a payment, well, that triggers basically a deposit. When I have somebody check in, you know, typically the way most people look at it, that triggers revenue. And so then I'm going to take that cash I received and then apply it against that essentially invoice, right? So I was holding on a bunch of money. I raise an invoice. This person owes me money. I take their advance deposit and I apply it against their balance. Essentially, is a lot of how we think about it. So we had two triggers. We had a payment was a trigger. We had a check-in, which was a trigger. But then you have the cancellation, which is another trigger. And so upon cancellation, it's it's basically as if it's similar to a check-in. Something has to happen with that money. So one, does it remain as an advance deposit payable out to the guest, or is that advance deposit now forfeited? So if that advance deposit is forfeited or part of it's forfeited, then I'm going to recognize revenue in some way or another. Now, then you ask the question of, okay, well, what's my management contract say? Do I keep all of that cancellation income for me as the management co? Do I share it with my owner? If I share it with my owner or paid out to my owner, can I charge commissions on it? There's always a lot of these rules and in tracking the money and around refunds and cancellations are always the fun edge case that you have to deal with. Most systems can automate it for the most part, but there's always still a bit of manual eyeing that you have to do to make sure you get it right.
Yeah. Yeah. Okay, now let's talk about reporting to the states. So again, it's this weird like middle place where we actually get money that comes to us, but then there's a lag. So if I'm reporting, my lodging tax, technically I have money in the account for a reservation. Do I report that to the state that month or do I wait till the guest checks in? Is there a right or a wrong way for that?
Yeah, another kind of gray area. I have heard some states make the argument that when you receive the cash, the sales tax is due. I've pushed back pretty considerably on that, and I would say that that's pretty much the rare case of how people recognize and report revenue, largely because you're taking an advance deposit, and also that advance deposit isn't even yours, so you're holding on behalf of somebody else. Therefore, typically what we see in practice is that uh, again, so if we take that money in as an advance deposit, some of that is taxes. At the moment they check in, that advanced deposit is then split into a bunch of different line items, right? Some is accommodation fare, some is cleaning fee, some is sales tax payable. And so that advanced deposit then basically splits into those three buckets. Some of that's going to go to the owner, some of that goes to you, and then obviously the sales tax payable again is what we call a liability due to your tax authority that you're then going to pay out. Again, you're filing timeline, that is very much going to be dependent upon, where you're at, where you're filing. You can have sometimes where you file monthly with a city, but you file quarterly with the state, right? So that really varies from jurisdiction to jurisdiction. But either way, and then you also have to beg the question of, okay, hey, how much, what's my revenue by property, by channel, because Airbnb might pay some of your taxes. VRBO, if you're the merchant, what we call the merchant of record, like you're taking payments through Stripe or another merchant processor, you're the merchant of record. So it really gets complex from a sales tax perspective. I can tell you safely that even on our team, the most complex and challenging problem for our staff to solve is sales tax. It's a tough one. It's very easy to mess up, a lot of complexities, which I'll plug Avalara and my Lodge Tax right away. We're actually working on having an integration with them soon, but generally speaking, we work with my Lodge Tax to file and stay in compliance for all of our clients.
That's great. Yeah, if you guys aren't aware, My Lodge Tax, I think it's just mylodgetax.com. You can basically outsource the responsibility of the, reporting and payment to the various jurisdictions where your properties are to them, and they'll make sure, like you said, that it happens just so.
Yeah, I think that's obviously really great. They also have a dashboard, which we're building one that'll plug into theirs too. But the biggest, especially if you're operating multiple jurisdictions, Colorado is a really tough one, right? Like each city and county is different. So if you're operating in Colorado and you've got some in Silverthorne and you have some up in Breckenridge and you have some over in Beaver Creek and Vale, the the reporting in each one of those areas is so different, and staying in compliance from a registration and licensing standpoint is really, really tough. And so that's for us where we find, services like My Lodge Tax really come in, save the day for us.
Yeah, that's awesome. Okay. All right. Cost of goods sold versus fixed costs.
Okay.
What are we tracking there? And how and why should we be tracking these business expenses?
Yeah. Well, for one, if we talk about cost of goods sold, a lot of people will also refer to that as direct costs. And so, and what you put in direct costs versus I'll actually use the term cost of goods sold versus other operating costs or G&A costs, because you could have some direct costs that are fixed, I suppose, probably not that many, but you could also have overhead costs that are variable, right? So it's more about direct versus overhead or operating costs.
Give me an example of what a direct could be.
So direct cost is probably your cleaning labor or your house labor. A lot of my clients will even put a lot of their vacation rental software, such as their pricing software or even their PMS software, as a direct cost. A lot of those are variable, and those are direct costs associated with earning your top line revenue. So, but the easiest ones, and what I see are kind of like a no-brainer as far as what lands in that direct cost bucket is, your maintenance labor, because you're going to have maintenance revenue, ideally, cleaning labor, cleaning supplies, and other direct guest-related expenses, such as channel commissions, merchant fees. A lot of times I'll see merchant fees down below, but I really encourage people, hey, put those merchant fees up above the line, or in those direct costs, because, and here's the reason why. The idea behind this is, from an accounting perspective, we really want to understand, we use the term profit margin. And in this industry too, we'll use the term take rate, or your net management revenue. Kind of all those terms are interused and can mean slightly different things from one to the other. But at the end of the day, what we're trying to understand is, for every rent dollar that you sell, how much profit margin are you making that is going to support your overhead costs, right? So, the idea is that, hey, I want for every rent dollar that I make, I want to have a gross margin of, well, we could say take rate, which means that, hey, I make for every dollar, I'm making between 40 and 50 cents in management revenue. And then also from a gross profit margin, I really want to be in the 30% range from a gross profit margin. And that 30% then is going to support all of my overhead and my fixed costs to run my business. And
Is
so
that kind of the normal industry? I mean, you've kind of quoted some ranges in here. Is that like kind of industry targets that people should be shooting for?
absolutely, absolutely. I would say, 40 to 50 or above on my take rate, which is, hey, what's my management commissions and ancillary fees as a percentage of, I guess, all guest fees is how that is calculated. And then what is my net management revenue after I've deducted my direct costs. And again, we see people in the 30 to 40% range are where you're really performing healthy from that perspective.
Cool. All right. So the cost of goods sold versus fixed costs again. I'm sorry. I feel like I sidetracked you. Did you finish
Yeah.
that thought there?
Well, I think so. Again, as opposed to fixed costs, I'll get back to your overhead costs, which is, hey, maybe I have a general manager, maybe I'm the general manager. What's my office expense? Um, Accounting, maybe accounting software, Slack. So many of us use these other software tools. So those are all my generally payroll that isn't direct payroll, right? Not maintenance, not housekeeping. Those are my operating expenses, operating and G&A. And so that's the difference. Hey, what are the things that are just largely fixed, might be somewhat variable, but they're not really direct costs associated with serving my owner, serving my guests. And so that's the difference between my direct cost and my operating cost. And you know the ultimate reason why we want to know this is because it gets to our break even uh, point, right? Which says, hey, how much revenue do I have to make to break even every month? Which can be really important when you get into your shoulder season, because you really want to be taking a look at, okay, boy, hey, if my revenue is going to take a dip in October and November and early part of December. Okay, well, what are my fixed costs? And what's my gross profit margin? And that will help you calculate, hey, what's my break even point? So that, because that's really what you want to do in shoulder season, right? Break even in shoulder season. Roll in the dough in the busy season. So.
Yeah, and kind of strategizing the cash flow, so that you can, whether you're saving to just get you through the shoulder season or whatnot.
Yeah.
So, all right, here we are, year end. As a property manager, I've got reporting requirements to my owners and all those different types of things. That can get cumbersome. A lot of work involved with that, whether it's the 1099s and all these different things. So, help us.
Yeah, well, hopefully, I mean, I think it starts actually not at the end of the year, but it actually starts at the beginning of the year. If I can state it that way. And the reason is because ideally you have the right systems in place, right? So if you have the right, owner statement system in place to track and report all of your revenues to your owners, that can then consolidate all of that into a nice year-end statement, then that eases that burden a bit, because for the most part at the end of the year, largely with one click of the button, you can produce this year-end statement. The flip side of that is, yes, we then need to file and report to the IRS all of these rents that in revenue that you've been collecting and then paying out to your owner. Look, probably one of the most, I don't know if it's controversial, but probably misunderstood or not understood elements of property management accounting is that when it does come to reporting that year-end number to your owner, you are technically supposed to, and I have lots of people that challenge me on this, but it's very, very clear in the IRS guidelines that you should be reporting your gross rents before commissions or any other fees are deducted. And so that'll confuse a lot of people. It confuses the owner because they're like, I didn't get paid out this money. And so you really have to, educate your owners a bit and say, hey, we totally understand that that's not what you got paid, but we're required to report to you the revenue that you earn, that we collected on your behalf. And so that number that we're reporting you is the revenue. And then we've produced this year-end statement for you to show all the deductions that get to the bottom line of what you're actually paid out. So, and so all of those deductions should be deductions that your accountant is going to be taking on your tax return, most likely a Schedule E, to get to your taxable income. So your taxable income should largely match, probably not exactly, but your taxable income is going to be the revenue less all those expenses. But the number reported on the 1099 is actually that top line revenue number before commissions and other fees are deducted. So again, it can be complicated for owners, but hopefully if you have your system set in place and you educate them correctly, then it won't be a surprise to them when they get it.
Yeah. So I'm going to illustrate this with some fake numbers. Okay.
Right.
You have this owner and they get this statement, this 1099, and it shows $100,000 of revenue.
Yep.
And like you said, they're like, you didn't send me $100,000. I only got, 70. Why does it say $100,000? And in that breakdown, it shows where all the rest of that $30,000 went to
Yep.
Airbnb and, et cetera, et cetera, et cetera. But really, in order to be accurately reporting, we need to report that full 100,000, not just the 70 that the owner got.
Yeah, and and part of that reason actually is that if we really want to get technical, and I haven't really ever seen like this type of kind of audit or anything take place, but let's walk through why the IRS is doing that and why you want to do it as the property management company. And here's the reason: is that Airbnb and your merchant processor are required to report all of the revenue that they paid out to you. So you receive all of this money. And the IRS that goes to the IRS. So the IRS is going, wow, you had $6 million in revenue this year. That's pretty darn good. Now, if you were to just report, $70,000 or again, so let's say it was $10 million. You collected $10 million from Stripe and Airbnb throughout the year, but then you only report $7 million to the IRS. Well, now the IRS is going, okay, well then, that difference, that $3 million is yours. But again, it's all about the revenue, because really all that $10 million is reported to you as income, and you want to turn around and report all that $10 million. You was like, no, that wasn't my income. That was my owner's income. And that's really what you're doing, because that's where you open yourself up to some risk. Now, again, I think, you'd probably be able to get through that audit, but the IRS would say, hey, you didn't file your 1099 correctly. And so anyway, there's a real reason why you want to do it right. And it's in your best interest to do it right.
Yeah. So I want you to tell us a little bit now. Educate us about the VR platform, and just kind of give us an idea of how Ximplifi can help people.
Yeah. Well, I think the best place to start is just really bifurcating between, hey, who's Ximplifi and what is VRP? Ximplifi, we are simply a outsourced accounting and consulting firm, right? So people come to us and they want us to fix their problems, and so we take a combined technology and people approach to solve people's problems. We want to make sure that we've got the right systems, the right accounting software, leverage your property management systems, data, et cetera, to set things up as efficient as possible, so that if you want us to do your accounting, it's really efficient and easy for us to do that. And so that's what a lot of people do. They come to us, they've had trouble finding people that understand this industry, that can produce owner statements on time, or they're tired of doing it themselves. And they say, Jesse, we want you to fix this and we want you to do it. So, and that's what we do. And we work with people from, 10 to 20 units that they're managing up to several thousand. So, in total, we produce somewhere around 8,000 owner statements a month at this point for people around the globe. On the flip side of that, I won't tell too much of the backstory, but in large part, we found using accounting features within property management systems to be challenging. I think most people out there would probably agree with that. No matter what, it's a challenging subject. It's challenging to do, but for us, that's where we built in a joint venture with some folks out of the UK. I'll just talk very quickly about VRP. So VRP, essentially, we market ourselves or market it as a trust accounting plugin. So we're going to plug into your property management system, into your merchant processor, into Airbnb, and some of your other channels, and we're going to bring all that data into one platform, VRP, and then we're going to automate a lot of the processes around trust accounting for your business as a property management company. So we're going to post that data within the accounting system of your choice, QuickBooks, Xero, Sage Intacct. And from there, we're then going to, again, automate invoices and payments and payouts and reconciliations, et cetera. Finally, producing what everybody wants to do, which is nice, pretty, accurate, timely owner statements for your owner. And so, that's what we do at the end of the day.
Yeah. So, kind of a middleware in there. It's aggregating information from a bunch of different sources and then kind of making sure that what goes into your accounting software is a more complete picture than just some deposit number from the bank, basically.
Right. Exactly.
Great. All right. Man, I have just peppered you with questions, and honestly, I could go on and on, but thank you so much, because there's so many things that it's just a huge part of running a really sharp operation and a huge pain point for a lot of people. So we appreciate, you guys and people like you who are really helping and providing strong solutions for the industry.
Yeah. Well, thank you. Certainly, the fiduciary responsibility of a property manager, or even if you're managing your own properties, is just it's so key, right? It's so important, and so we're very proud to help people take it seriously and also make it easier.
Yeah. So tell us how people can find you guys. How can they connect with Ximplifi?
Yeah, so the easiest way is to just find us on our website, www.ximplifi.com. That's spelled with an X. I always say spell simplify, but put an X at the end and an I at the end. replace the S and the Y with an X and an I. That's ximplifi.com. So that's the easiest place to find us. You can also find us at VRPlatform.app if you're interested in seeing a demo or signing up to use our app. So we are running a special right now. I think it's okay if I talk about that.
Absolutely.
Okay. So we are running a year-end special right now where we're giving people a free month trial as well as 3 months, 50% off, so that you can sign up, start using the software, connecting your, all of your different systems, start seeing the data pull in, set up some automations to post some invoices and payments and see how that works. And certainly, our support team will reach out, onboarding team, to make sure that everything's working the way that you expect it to, or if you have any questions. So anyway, but that's our year-end special. So we're excited to get more people connected on our platform. I should just say too, currently we support HostAway, Guesty, Hostfully, Hospitable, and Track. I think those are it. If I said Guesty, booking automation too. So anyway, those are all the systems that we support. So the other way is to email Britt at ximplifi.com. So she's listening, and she'll make sure to take care of you as well.
Yeah, that's great. That's great. Well, and we will put links to all of that stuff in the show notes for today's show. So we'll make sure that we
Great.
make it easy for people to connect up with you. So great. Hey, everybody. Thank you for joining us for this episode. If you've been listening to the podcast, before we kind of wrap up here, I just want to kind of put a little bug in your ear as well. If you are not familiar with STR Hub, please make sure you take the opportunity to go over there. We have a section specifically talking about accounting solutions where we have additional information about Ximplifi. So you'll be able to check it out and learn more by going directly to them or also over onto STR Hub. So we are happy to help spread the word about what they're doing and the solution that they're providing for the short-term rental industry. So thank you so much for joining us. If you've been listening to the podcast, we are going to let you go. But again, Jesse and I are going to continue the conversation, and this will be bonus content that you can find on our YouTube channel. He is actually going to take us into that VR platform and just give us a quick tour and show us a little bit about how it works and that interface. So thanks again for joining us, and be sure to join us next week when we have our next conversation with the innovators who are designing the solutions that are shaping our industry. All right, Jesse, we will let you open a little window here and take
Okay.
us in.
Sure.
Show us VRPlatform.
Yeah, definitely. So as I started to say earlier, as people first sign up, the first thing that we encourage them to do is just, hey, connect all of your systems. Connect if you have an Airbnb account, if you have, your whatever property management system you're using. Our system currently works with, is really driven around connecting with an accounting software. I will throw a little teaser out there that we are working on our own general ledger platform. So that means we'll be able to operate VRP independent of an accounting platform or accounting system like QuickBooks if people so choose. So we're looking to launch that early 2024. But then also, your merchant processor, Stripe being the one most used, but certainly there's a few others that we connect with. But from there, you'll start seeing the magic pull in. Payments start pulling in. Again, these are all the deposits. So a lot of people operate a lot. They might operate 5 or 6 different Airbnb deposits, and so it really becomes a pain to know, hey, what payment is coming in from from what system, and so they might need to go to reconcile all that data. It becomes kind of hard because you have to go flip around from account to account. But here we're going to aggregate everything, and this data and all of these details as well are posted within QuickBooks as a what we call a deposit journal. So it really allows you to reconcile those batch deposits nice and easily, and along with different resolutions that might be paid out on a reservation. Same thing with Stripe. Again, we're gonna post these out as deposit journals, and then also break out the fees that are going to be deducted from that Stripe payout, which you can then later down the road automatically deduct that from the owner in the future when the reservation actually stays, right? So because a lot of people deduct merchant processing fees or channel fees, which I'll get into that a little bit later. But having that data all in one system really helps. Here we see all the different reservations. Again, I'm going to kind of go back into May, which is where most of our demo data is. And so here we can see various reservations. Here, we actually have one that doesn't have a full payout yet, right? So they actually have a reservation, they had an extension, but we only see a partial payment. So, but this is the breakout, which is going to be posted as an invoice in QuickBooks. And you're able to completely manage how all this data flows to QuickBooks. So you can take reservation to accommodation fare, host fee to a host fee expense, and you can even do that. You can change it from one unit to the next. So maybe the host fee is deducted from one property, but on another property, it's not deducted. It's something that is the expense of the management company. So all that flexibility that we see across units, we've built it with that flexibility in mind, because we know not only from management company to management company, but from unit to unit, things can get fairly complex. Here we see all of our listings, which they're tied to specific owners or viewers of these listings. So, here we can see Michael Audette owning multiple different listings. Owner is kind of a similar view, but it kind of reverses it. Okay, hey, here's my owner, and here's the listings that owner. Here's the listings that have been assigned to that specific owner. I talked a little bit earlier about commissions and fees. We know that property management systems often have some sort of calculation or system to deduct certain fees, but it really became hard to kind of know what the capabilities were from one system to another. So we just built our own, which just allows us to take everything that is coming from the property management system and then automatically calculate and deduct commissions. And again, this is extremely flexible. So you can have a rate that is 20% default rate, but then you can change that from listing to listing. You can have a different formula. So if we just pull this up here, we could have a different formula for just Airbnb reservations, or for just this listing versus this listing. So very, very flexible. Essentially almost anything you can think of, you can do it. Here's a fixed fee. So some people might deduct supplies fee. They might do a supplies fee times the number of guests or number of nights. So another way that flexibility in how you're going to set up these rates and deduct them. Again, all of those rates are going to be able to be deductible or changed on a listing by listing basis. Here, I talked earlier about Stripe fees. Again, they can be deducted. Also, you can, this is such a small nuance, but I bring it up because to show how much we think about the small nuances. Let's say you have a Stripe fee, you want to deduct that Stripe fee, but you want to also adjust your management commission because we call it a pre-deduct fee. So I'm going to deduct that fee before I calculate my management commission. So we will actually, automatically adjust your commission if you select your commission here. We would say, hey, well, this is a pre-deduct fee, and we want to adjust the commission calculated for this processing fee that's been deducted. So anyway, a lot of details and thought have went into how it's being built to completely automate from nuts to bolts. And then finally, it's paying out the owner. It's producing the owner statement that owner wants to see. Here's an example. These owner statements are also very flexible. You can bucket and show as much as you want to show or not show. For example, a lot of people will bucket accommodation fare and channel fees together. But if you want to break them out, you can break them out. And so here we see what we call the net revenue section. That almost takes us back to our direct cost conversation that we had. And typically these are all direct costs associated with a reservation. So the channel fee, a direct cost deducted from the accommodation fare, the management commission directly associated with the reservation and the accommodation fare, getting to your net revenue owed to the owner. I should show another one. See if I can find one that actually has some expenses in it. So here we see the expenses. So as your expenses are coming in from your credit card or your bank and posting into QuickBooks, you just put those into a billable expense account within QuickBooks, and then that will then flow through. You tag it with the listing, obviously, or the class of the listing, and then those expenses too. So you don't have to upload your expenses, let's say, from QuickBooks into VRP. As those expenses come through and post from your credit card, they're then just going to post right in the owner statement. So really makes the process of tracking, tagging, and deducting owner expenses from the owner statement really easy. I should just show what the owner would see. They would see this, which they can also export to PDF, but then also,
So will they have a portal where the owner can just log in here, or how does that work?
so here's the portal that they would see. So, as the management company, you're going to be able to, pick your color scheme and then upload your own logo. And so you're right, the owner is going to receive, once you publish, and I guess I wasn't showing that earlier, but you're actually able to, for example, for our clients, we will take, I'll actually click out this real quick here and then come back to it. So in this owner statement, we are going to put it into from draft to review. And so that's typically where our owners are reviewing it. So they're going to go in, look at it. Hey, yeah, everything looks great. And then they're going to take it to published. And then also they can also take it to posted, where we actually automatically create a bill to pay out the owner. So once it's published or posted, the owner will receive an email. Hey, you have, your owner statement is ready. Please go view it, with this link. So that link will then take them to their owner statement portal, where they can come in here, click in, this particular owner has multiple statements, so they can choose the unit. You can rename these. These are using the description, but you can actually rename these, what their actual property is, or maybe the address. And here they can pop in, see their statement for that particular unit, see their net income, the balance. Here we actually haven't done a payout. Obviously, that typically isn't going to be the case. They'll see what the payout that they should be expecting. And then also, what we're really excited about, or what we find owners really love, is the statement summary. So here they can see the whole year if they want. So all reservations and all the detail of all their units combined. And so if they have one company that owns everything and they need to just export everything to an owner, or I'm sorry, to their CPA, they can just download everything in CSV and send it to their CPA and say, hey, here you go. Here's my Schedule E. And then also, we haven't quite yet launched it. We're actually testing it this week, which is our year-end summary and 1099 feature. And so ultimately, you'll be able to produce a year-end 1099 statement that will also automatically e-file your 1099 and pull back in that PDF 1099 into their portal. So really making that year-end process seamless, where you'll be able to produce that year-end statement, click a button that e-files with the IRS, produces that 1099 and brings that back into the owner's portal, so that they can grab that and use that for year-end reporting. So again, really trying to keep the owner in mind. Well, making it easy to give owners the information that they're looking for at year-end.
Yeah, that is amazing. Oh my goodness. I love what you guys have built. And, even as like I said, this was kind of a selfish endeavor having you guys come on the show, because, as I'm in the process of working with a partner and setting up a property management company, accounting is not what I consider, my strongest area. And so, I felt like it was important to get educated. And so in conversations even that I've had with you guys, it really is a fabulous product that you guys have built. And I loved also, that you have kind of a knowledge library, and that you have, I don't know what you guys call them, like a town hall or webinars or whatever, where people can, get some education and support.
Our support and onboarding leader, he calls them fireside chats with Michael. So I don't know if he actually, that's what he tells me he calls them. I don't know if that's what he calls them on the on or not. But
I think that that's great, because, if someone is working hard and earnestly trying to figure this out, it's great to know that, we can have our fireside chat with Michael and, continue to grow in our confidence and efficiency with all of these different systems. So Again, Jesse, I just want to thank you so much for joining me on the show today and this extra time that you've spent to take us into VRPlatform and show us around. And again, anybody who's listening to the show who is interested in, what they have to offer, it's Ximplifi, Ximplfi. Yep. Oh, they're on his hat. Perfect. So be sure to reach out to them. Happy to answer any questions, just the nicest people. So all righty. Thank you so much, everybody, for being on our show or for listening to our show. And thank you, Jesse, for being on the show.
We'll see you. Take
All
care.
right. Take care. Happy Thanksgiving.